Good morning, everybody. How is everybody doing on a Wednesday morning? August 31st, last trading day of the month. Keep that in mind as we're moving throughout the course of today's session. It is a Wednesday. It's hump day halfway through the week, so we've got that as well. And yeah, things are shaping up just fine over here. So happy to be here this morning. We got our Adp Nfp preview here at 8:15, odd timing. Usually it's an 8:30, but 8:15 it was. And you'll notice that here we go, big kind of miss there. So that's interesting that there was such a big miss and a little bit of contraction actually as compared to the previous, right? Boom, right on over there. So overall, that number usually doesn't move the market much. It gives us a little bit of a forecast on what this might be like down here, but this one is the market mover. This is really just our preview. So it's saying, hey, things might not be great, but we don't know exactly to what tune they might not be great. So That's what we've got there. Chicago PMI comes out at 945, something just to be aware of in terms of volatility. I wouldn't put too much weight into it in terms of being flat, long, short, whatever. I wouldn't trade based on the news, whatever you think is going to happen. I would just, again, carry it forward as a little bit of volatility possible around 945 this morning. So that's really the economic calendar here. So we've got on the docket for this upcoming morning. As we know, some bigger things are happening down the road, a little bit further out here. 2 weeks from now, we will be getting our CPI PPI for September. That's right here, Tuesday, Wednesday. And then the following week, based on that data, I'm sure the Fed will come out and say some things during their big FOMC meeting / announcement day when they give the press what the press wants to hear, right? So that's further down the line, end of September. So we don't really have to worry about that quite yet, but just sort of giving you a timeline of what we have on the docket the next coming weeks. It's really all about NFP this week, and then things settle down before we start getting into those next inflation reads. So there's that. It's just things to be mindful of. We're not trading, long or short based on either of those things. We're just keeping them in the back of our mind, being prepared for some volatility. Here we go. What's going on the CNBC front? Any big headlines this morning? Bed Bath & Beyond announces store closures, layoffs, and new financing in a push to fix the struggling business. It just interesting considering everything that's been going on with that stock. It's not even worth really digging into. To me, it's just funny that made the biggest headline there. Instead of, look right here, the little live, right? Stock futures tick higher as Wall Street tries to recover from a third straight day of losses. And it is trying to tick higher. It is trying to recover. But as we'll see in just a moment, we're really just still, last time I checked, we were still inside the prior day's range. So nothing too impressive going on that front. You can see up here, yes, technically the futures are green other than oil. What else? Mester sees the benchmark rate above 4% and no cuts during 2023. Interesting. Right now, I think the target benchmark rate is somewhere around 3.75, I want to say. 3.75. That was the last I remember seeing. I could be wrong on that, but so above 4% obviously means a little bit more aggressive with the rate hikes into the end of the year. I guess we'll find out as that inflation data comes out 2 weeks from now, CPI and PPI. So as we saw with the ADP number, only growing by 132 instead of the expected 300K. That's a bit of a miss there, right? What else do we have here for stock-specific headlines? Mortgage demand falls. BYD plunges after Buffett trims his stake. Interesting. BYD. Am I just having a mind blank here? But what's BYD? BYD. Why do I not know what that is? Is it something that important that we should know about here? What is BYD? Boyd Gaming. Interesting. Boyd Gaming is the stock there, and this is not something that I've ever traded. It's not something I'm familiar with, so that doesn't mean a whole lot to me. Sorry, Buffett, but I'm not following you on this one. I'm also adjusting the bottom of the screen here. That looks to be about good right there. All right, I like that. Back on over to the headlines just to wrap this up, see if there's anything else that's stock-specific, some political headlines. Apologies. I literally almost read this out loud as IKEA begins a risky nuclear power plant trip. Certainly not the business model of IKEA to be getting involved in nuclear power. Anyways, just more political stuff. Toyota pledges up to $5.6 billion for EV battery production. That's kind of cool. Bosch will invest $200 million to build fuel cells. Social Securities could be a front burner issue. Bank of America. So here we go. Stock-specific headline. Finally, an upgrade to PayPal. So PYPL is the ticker there. PYPL getting an upgrade this morning from B of A. Interesting. I wonder what that's doing. This might be something worth taking a look at because PayPal's a decent trader when it comes to options. So we will definitely try to make it a point. I know I always say this, but you guys hold me to it today. We'll try to make it a point to take a look at the PayPal chart. Autonomous delivery company, nothing stock specific there at least. Biggest moves pre-market, designer brands, Express, Chewy. Those are all earnings candidates. Political stuff. The worst month of the year. We're headed into it. Interesting. Snap loses 2 major executives, maybe bigger deal than 20% workforce cut. So watch out in Snapchat. Not really interested in trading that one. Kind of the crummiest of the crummy tech stocks, right? That one's pretty tough. U.S. frees unmanned sea-based drone from Iranian control. So political stuff, credit cards, and inflation over in Europe continuing to absolutely skyrocket. So the main thing, I guess, is that there continue to be some tensions across the global political sphere. Inflation's still not great over in the UK. And we know that there's only one stock-specific upgrade today, and that's on PayPal, which is a decent trader, so maybe we'll take a look. That's really it in CNBC. Let's see what we've got on the earnings candidates. Of course, yesterday after the close, we had CrowdStrike, Chewy, HP, HPE. Those are the ones that I really would have been watching there. Before the open today, a little bit of movement in Express, as we just saw from those headlines, but really, after the close, it's Mongo, Okta, maybe C3AI. Just because people were kind of into that. That was kind of one of those, I don't want to say meme stocks, but it definitely was getting some love as everything was going crazy through 2020, right? After that, maybe Pure, end of day, or end of this list over here. And then, of course, Thursday, consumer staples, and that's really it. And yeah, Lululemon, right? It's Lululemon, as I was corrected the other day. I don't know, I just blend all the letters together, and I get Lululemon. Strikes me as being right. Broadcom, of course, as well. AVGO, ticker on that one. Big boy stock. Usually not the greatest options liquidity, though. So all the squares are where you should be focusing if you're an earnings trader, in my estimation. That's probably where the better opportunities are. Let's take a quick peek at the futures now. See what's going on. Oops, didn't navigate back from the NQs. Let's go ahead and do that now. ESU 22 is what we want. Here we are. 15-minute time frame is good. We're going to zoom in, and we're going to ask ourselves the three questions that we're always asking. Question number 1, question number 2, and question number 3. But who was the first one in the chat today? Plant-Based Will had a streak going from yesterday. Again, there was no stream on Monday, so we were going based on the brand new start from yesterday, because Jay Cortina, I believe, was the first on Friday. So Plant-Based Will, look at that. First up again, good morning. Sunshine emoji, smiley face. Thank you so much for joining us this morning, Plant-Based Will. You now have a 2-day streak, and all you've got to do is keep it up for 3 more days, and you'll either get your choice of a $50 PayPal, or if you wear a size small, large, or double XL, we'll send you a shirt, whatever you'd like. After that, we've got Ida, Raz, Blood-Tinged Wolf, Small Good Decisions, Was Up, good morning to you. James Young, INF, the based homie. We've got Kid Ray. We've got Rago, Ryan Speed, Live Better, Christian, Scalp Daddy Dollars, Luis Sanchez, Gregory Rulo. We've got INF. We've got you already, Plant-Based Will, Based Will. I'm sure INF is a big fan of that one. Austin, Bruce the Boss, Mickey, Blood-Tinged Wolf again. Repeats this morning. We've got Kurt, Tade, Tarushi, which is Tars Hui, right? Disaster Tank, we've got Arcana, Mona Makes More, Michael VR, Arm V, Strategic, Lawrence Tyan, we've got Bunk Mr. Wallace, we've got Javier, M. Spears, Random Factor, Swipe, Siege, Shaq J, Miami Beach Broker, good morning to you, sir. We've got Jay with the gold cash bag, Johnny Whitaker, A. Ramus, Houston, Texas, Susan, Virginia Beach, Alex Dickinson, the Sankofa, the list goes on and on and on and on. And thank you, really sincerely thank you for everybody coming out. Everybody who said good morning. If I missed you on the shout out, the best way to get a shout out is to get in here early, say good morning, drop something in the chat early, and I'll probably catch your name in the early part of the stream. So with that being said, let's hit the thumbs up button on the stream and we'll get right into these 3 questions. Question number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. We are certainly opening in the midpoint of the prior day's range. That is a fairly neutral and balanced indication, so we'll drop a tilde on question number 1. Question number 2, where are we opening in relationship to the overnight range? A little bit more specific, right? Here is the overnight high. Here's the overnight low. We're still opening right in the midpoint of the overnight range. So another tilde for a balanced indication. Question number 3, what is the overnight inventory position? Net long, net short, balanced, imbalanced? What's the deal there? To do that, you extrapolate the settlement of the prior day's session. That's the same thing as saying the closing print. And what you'll notice is that there was some activity below, but a majority of it certainly happened on the upside here. One thing that I would point out, though, is that this was retraced 100%. This is just kind of getting us a little bit more net long currently. I'm not really seeing like a major major imbalance. I would say that this might be something like maybe if we're really pushing it here, 70% on the net long side, just based on, yeah, most of the action happened above the settlement, and this is starting to push us net long after this corrective move right here. So maybe if we're lucky, 70% net long, probably more realistically something like 60 to 65% net long. It's really not that important to recognize, the 5% differences between these two things. It's of course not what we're after. We're really just after determining whether or not there's possibility for some knee-jerk reaction, and it's likely that, in the case of really obvious ones where we're 100% net long or net short, that's where you just want to quickly identify and say, okay, it would make sense that this inventory would correct. In in an instance like this, because we're so balanced based on what question number 1 and question number 2 are telling us, there's really no, I don't want to say there's no point in reading into question number 3, but it's not as important to get as precise, right? So that's all I'm getting at with this brief explanation. So I would say, as you guys know also, that we're probably in store for another balanced open, or at least that's the excuse me, that is the expectation. I'm going to grab a sip of coffee, actually. There we are. That is the expectation, right? Now, what the market does, whether or not it meets our expectation or breaks our expectation, is a different story. But we've got to stay disciplined. We've got to deal the hand we're dealt, deal with the hand that we're dealt. And right now it's saying, okay, we're opening fairly neutral. I wouldn't really get aggressive one way or another here on the open based on the 3 questions that we've just answered, okay? So there's that. The last thing I would read into from this perspective is, where are we opening in relationship to this value area? I mean, we know that yesterday was a nasty, nasty morning. This move was basically vertical, and then we consolidate and kind of go sideways into the close, right? So where are we in relationship to all of that consolidation, which inherently is the value area where the most time was spent, right? Where the most volume was put in as well throughout the course of the day? We're opening above the value area high. So is that an indication that things might be a little bit stronger as opposed to all out bearish? Maybe a little bit. Again, I wouldn't read into this as like, okay, we've got to smack it long on the open with 100 contracts in the ES, and we've got to ride it into the prior high of day. That's not what I'm saying. But what I am saying is, these people, if they were positioning short late at basically the lows of day, anyone who's short in here, they missed the move, so to speak. And now, if we're opening above the value area, those people are underwater. It doesn't mean that they have to squeeze out, but they're more likely to be feeling pain, which over time, would indicate that they can only feel that pain for so long before we do ultimately get some upward lift based on them closing out of those positions. So again, I'm not trying to advocate for a massive short squeeze that runs into the prior high of day nonstop off the open and then continuation to the upside. I do, though, want you to be aware of where we're opening in relationship to the value area. We are above it, which is a slightly more bullish indication as opposed to being all out bearish for some nasty continuation to the downside, right? If we were looking at something that was more bearish, obviously in the overnight session, or for the open rather, we would want to see an open near the value area low or under the value area low, and we would shift our tone to being, okay, this is slightly more bearish than bullish, right? We're still inside the prior day's range, but these shorts are content. They're feeling okay. They're not feeling pain, and we can continue to maintain that bearish slant. But currently, we're above the value area high. So we always play the chart as it lies. We are not here to make conjectures about, oh, the market's been selling off, so it's got to just continue to sell off for eternity until it ticks up one day. No. Let's be a little bit more tactical and strategic than that, all right? So what do I think is going to happen on the open? Then we'll take our pull, then we'll sift through the NQs, the Russell, and move into the core list. And remind me, guys, hold me to it this morning. We've got to take a look at PayPal with the upgrade. I just want to see if anything interesting is going on there. So I don't want to derail the stream right now, so we're going to save it until after the futures, but we are going to look at PayPal. So here we go. Here are some of my expectations on the open. So as always, when we're opening in balance like this, I would love to see an opening range, take out the top, something like this, take out the bottom, value area rotation goes to the lows, right? Value area low, that is. So for me, line in the sand here for the opening range specifically is going to be the value area high. If we put in an opening range above, I would lean on longs just based on everything we've discussed about these shorts being trapped with terrible trade location. If we breach the opening range highs and we've been holding above the value area high, there's at least a move into the overnight high. If not, look left, thin structure. Maybe over the course of the day, we move towards the prior high of day. Don't get me wrong. This is a pretty large range. 40.46 down to 39.64. I mean, 80 points for, just rough eyeball sake, 80-point range, huge, right? So I'm not saying that we just rip for another, what would that be, 40, 50 points to the upside here on the open. I'm just giving you an idea that there's not a whole lot happening here on the way lower, right? So that's what I've got on upside. That would be my bullish outlook for the day. And again, this is all contingent upon an opening range being put in above the value area high. I want to be very clear about that. For the bullish scenario to unfold, for me to be a little bit more confident about breakouts here over the value area, over the opening range high, I would love to see the opening range take place over the value area high. So that's scenario number one, just because that's where we're slated to be opening currently, with prices pushing higher above the value area high, as opposed to dribbling back lower in this area here. All right. So that's scenario number one for me. Scenario number two is, okay, we do something like this. Underneath value area high, I would be much more neutral in this overall range. I think that there's opportunities for, 5-minute patterns, 2-minute patterns, if you're a micro scalper kind of guy, gal, whatever, that can take place in here. But this is going to be a pretty tough area to trade on the chart, in my estimation, just based on all the chop we saw in there yesterday. For just blatant continuation to the downside, it's just, you've got to breach the prior low of day, right? And that is a poor low. I believe it's a poor low on the market profile. We'll take a look in just a moment, but be mindful of that right there. If that breaks down, yes, doors are open for more downside, right? So that's the ES. That's where my head's at. Just to reiterate, again, opening ranges produce a number of trade setups. There's 4 in particular that we're watching. If you get an opening range, of course, there's the break of the highs, break of the lows. Those are breakout or breakdown trades. The other ones are the fake break to the upside, then crossing underneath the bottom. That's going to be even more powerful than just a straight up breakdown, because you've got trapped longs up at the highs. And the same is true, but opposite on the upside, right? Trapped shorts here, breaking the top, boom, you get some more of a powerful squeeze to the upside. So that's where my head's at. Let's see what the chat thinks on today's session. What's going on with the chat here? So opening range that turns into a breakout, higher low above the opening range high, somewhere up here, right? And then continuation to the upside throughout the course of the day. Drop me a number 1 in the chat. If you're a little bit more neutral on the day's session, opening range might be a little bit sloppier, something like this. We toy around in the value area. We don't really make a new high above the overnight high. Maybe it's a little lower, something like this, whatever. Really just more of a continuation of this kind of look on the chart. Of course, that's a scenario number 2. Drop me a 2 in the chat. And then you bears, identify yourself, please. We need to know who you are, and we need to know right now. So if you think it's bearish on today's session, straight to the value area low, lower high, dead cat bounce, breach into the prior low of day, go in a, hell in a handbasket for the market. Drop me a number 3 in the chat. Identify yourself. If you think it's a combination of any of these two, so you think it's going to be balanced that turns into a late day sell-off, drop me a 2-3. If you think it's going to be an early morning break to the upside that fails, drop me a 1-2. You can get creative with it. All right. So that's what I want to see in the chat. If you don't know what's going to happen, it's okay. Drop us a number 4. And as we let that simmer, I'm going to make the official poll in the chat. So here we go. What do you think will happen this morning? Question mark. Nice. All right, 1, bullish. There we go. 2, neutral. We've got to add a couple options. Boom, boom. 3, bearish. 4, absolutely no clue. All right, that'll be going live right about now. And as that official one makes it out there, we'll see what else the chat has to say here this morning. All right, so let me scroll up a little bit. And what are we getting for responses here? Jason Lee, good morning. Derek N, good morning. Jake Hendricks, good morning. We've got Ross, Rug Pull, good morning, good morning, good morning. Soldier Down is here. What else? Pete and Repeat. You know who we haven't seen in a little while? Actually, yeah, I'm blanking on that. I had it. I thought I saw the name this morning, and then it drifted away. It's going to come to me, and I'm going to be like, yes, that's who I meant to say. Anyways, all right, sorry for the mental pause there. In terms of chat responses for the poll, what do we have here? We have got ones coming in from Alvinator, 2-3 from Chris Hunt, Buckminster Wallace with the 1, Jay with the 1, Dave Morgan with the 1. What else do we have here? We've got 2s and 1s, 2s and 1s. We've got 1s, 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 2s, 2s, 2s. No straight up 3s that I've seen just yet. Roz dropped to 2-3, but it's not a straight up 3. And then Peter G, there we go. Peter G is the first straight up 3, followed by Jim Beckett, back-to-back 3s. So you guys can be in the same camp this morning. Bears, A. Ramus can join you as well. But lots of 2s, 2s and 1s, 2s and 1s, 2-1s, 1-2s, those types of things here this morning. Any other straight up 3s? Not really. Not seeing very many. Michael V, straight up 3. Yeah. Too much pain, number 3 from the Sankofa. All right, so I would say that there's kind of a mixed bag out there, but definitely the chat leaning more towards 1s and 2s on this morning session. So something that favors upside or is at least just neutral. It would seem that a majority of people don't really think that we're going to get blatant continuation to the downside, which of course is the number 3 scenario. And I would be on board with that based on what we're seeing in the pre-market. It doesn't mean that the market can't give us a scenario number 3. I would just say that the odds definitely favor here. Again, an open above value area high is a step in the right direction for taking out these shorts late to the party. If we get an opening range, break the opening range high because we are still opening, remember, inside the prior day's session. You know, this is technically still a balanced open. We're not in the value area, but it is still a balanced open. We're inside the prior day's range. If we can get something that looks like this, definitely looking for a little bit of upward lift as opposed to, you know, just boom, something that does this on today's session. So I would agree. I would agree with that. Pups asking about the time frame for the opening range trades that I'm speaking of. It really depends on your own. It really depends on your own risk tolerance. I've had a number of one-on-one calls with folks recently, which is, you know, I love chatting to them about their particular strategy, what's going on, what time frame is right for them, and you know, it helps me just as much as I'm sure it helps them to walk through what's right for me is not necessarily right for you. You know, I don't want to say too much and, you know, derail the stream here, but if you're someone who's a micro scalper and you're using a 1 minute time frame, then, you know, the 1 minute chart is going to drive what your trades look like, right? So you want to watch the 1 minute. If you're looking to hold things a little bit longer, you're an intraday trader, maybe the 5 minutes right for you, the 15 minute is right for you. It's such, again, there's 50 shades of gray in trading. There's very rarely a black and white. There's only 2 things that are black and white. Again, we're not going to get into all the nuance of this stuff, but just to address the question quickly, it's the time frame that's right for you. Let's say the 5 minute opening range is tight and then it breaks out and then it comes back in and continues to range out and you're like, oh, I should have used the 15 minute range. Well, guess what? That's not what your trade plan said. Instead, you had a tighter range, right? You should have stopped out on your particular trade or took profit depending on whatever your parameters are and then go from there. Like, you can't look at these things in hindsight and just say, oh, the range is continuing to develop. You know, I was wrong with the 5 minute. Need to adjust to the 15 minute. Because guess what? Tomorrow, when the opening range starts and it's the first 5 minutes, the first 5 1 minute bars, and then it breaks out and does something like this, then you're going to kick yourself and you're going to say, oh, I was waiting for the first 15 because of what happened yesterday. It's like you'll get wrapped up in an endless cycle of trying to figure out exactly what, you know, the opening range is. So I would say pick one thing, something that makes sense for your particular time frame, and stick with it. That's the best thing you can do. All right. It'll lead to more consistency in your trading. You won't be flip-flopping back and forth. Maybe the opening range is something that you don't even look at, right? I'm just suggesting that it might be more likely than not that the market balances here on the open. It might not even do that. Maybe you don't even care if it does that. Your trade setup is waiting for the first push and trying to buy the first higher low pullback, right? So I could go on and on and on and on about these things. But again, just to hopefully quickly touch on some of the questions that are coming into the chat, that's what I would say about that, all right? So hopefully that was useful. I hope, yeah. I hope that gave a little bit of insight. So that's what we've got. All right. That's the ES. That's where my head's at. That's what it seems the chat is thinking on the day's session. Again, leaning into that 2-1 camp, which is neutral to break out over the course of the day. Please, again, remember that this range yesterday is very large, about 80 points, right? 80 points worth of range, really, really big. So knowing that, don't have massive expectations of like, boom, break the prior high of day. Just manage your expectations is what I would say about that. All right. So that's the ES. Let's take a quick look at the NQ. What's going on in the NQ futures? Any major discrepancies, divergences happening in the NQs? Not really. I would say, well, okay. So let me retract that statement, but just a little bit. We're still definitely opening inside of range. So let's just stick to the script, right? Question number 1, are we opening inside the prior day's range? Absolutely yes. We're opening in balance here in the NQ. So question number 1, balanced indication. Question number 2, where are we in terms of the overnight range? There's the high, there's the low, certainly pushing into the upper third, a little bit more bullish here in the NQs, not really in the midpoint of that range. So slight edge to the buyers there. And then question number 3, where, what's the overnight inventory position? This is much more net long. Notice how this and this is like far more shallow than what we saw in the ES. Yes, we have that correction here, but look at the most recent push back up practically into the highs of the overnight session, which is important from question number 2. Strikes me as being more bullish. The other thing I would say is look at the distance that, we've already traveled away from the value area high. Like the ES we saw was, more akin to opening somewhere in here. Whereas in the NQ, much more strength, further away from that value area high. Does it mean that these shorts late to the party start to squeeze out sooner? Maybe. Just maybe. All right, so in the NQ, I would say that we're probably watching for something similar. We still are opening inside the prior day's range, so there's a possibility for balance on the open, whatever kind of range. You guys know I just drawn this squiggly mark to represent the range. If we take out the top, again, at this point, because we're so close to the overnight high, the trade might be opening range high break or overnight high break, depending on how the opening range ultimately unfolds. Right? If it does something like this, I'll try to be a little bit more precise with my drawing, then obviously that's a very critical breakout point. If that gets taken out, it's game on for the prior high of day. I want to again reiterate that the range here is quite large, so manage your expectations. But this would kind of be how that trade unfolds, right? Break of that high, overnight high, two things, confluence, sets up the long trade. If we are just chopping around in here, I would say that there's the possibility for a pullback buy off of the value area high if we see a sell in the first place. So this is the difference in the NQ, right? Because we've got a little bit more distance to go until we interact with that value area high. If the market opens, ranges out, and pulls back, or maybe it just pulls back on the open without a range first, then I would want to see what the reaction is around the value area high before making a determination of, okay, we should go long here on the pullback, or avoid bear flag is more likely. Maybe we break down into the prior value area, right? And we start getting more of that two-sided chop, similar to what we saw in here. All right, so in the NQ, slightly different. I would say that there's some relative strength here inside of the tech sector just based on the distance we're opening away from the value area high. Critical pivots in the NQ, overnight high, value area high. All right, those are the two numbers I would really be focusing on in the NQ. Something we didn't do in the ES, which I meant to do, and I'm already kicking myself a little bit for it, is looking at the higher time frame structure. I want to go up to let's go with the hourly will work for now. We've got this sort of light gray highlighted box. Remember that the market sentiment won't really change in the grand scheme of things back to being bullish until we can put in a higher low above roughly 12,800, right? 12,800 in the NQs. So there's still the possibility that we can rally into this, produce a lower high on the higher time frame, something that continues to follow this trend, and then we're still bearish, right? Looking for shorts up around that area. Remember that the daily trend, the hourly trend, it has shifted to the downside. You could consider this a head and shoulders. There's kind of your neckline, right? So a back test of that neckline is critical. Again, that number is 12,800. Seems like a bit of a pie in the sky stretch for today's session, but I do want to give you the overall context that although, yes, there are some slightly bullish implications about the overnight session here, we're not out of the woods from the grand scheme of things, okay? So that's your NQ higher time frame look. We'll quickly flip on back to the ES higher time frame look on the hourly. Again, just to give you that equivalent level, it's even slightly different than the NQs. So here is the gray shaded box. In the NQ, we use this area right here, right? The prior highs instead of the lows of that balance. So there's already a little bit of weakness, relative weakness in the ES, right? So be mindful of that. But regardless, doesn't change the fact that we're still looking at this as a pretty critical pivot, right? There's no reason to get bullish in the ES in the grand scheme of things unless we put in a higher low above roughly, I'm going to round it up here just to keep it really simple, 4085. 4085, okay? 4100, 4085. Unless we can higher low above that, then again, bears still technically in control. Yes, we do have some short-term bullish implications opening above the value area. There might be a little bit of a squeeze, but just bear in mind, no pun intended, that the bears are still in control underneath that 4085. All right, so the higher time frame is definitely still worth consulting just to make sure, we're aligning ourselves with the current trends. The head and shoulders pattern here is not as pretty, so to speak, as what we saw in the NQ, right? There's kind of your neckline. Boom, 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 and we're still well underneath it. So that's the ES. Let's quickly round out the broad market, if you will, with the RTY, the Russell 2000. What's going on here? So again, there's sort of your prior pivot highs, support, 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 broke, break, retest. So literally a picture perfect play, or I should say textbook chart pattern rather, in the Russell. Excuse me, I almost said NQ. Certainly not the NQ. So in the Russell again. Just want to reiterate, higher time frame structure does indicate bearish. Let's drill on down to the 15 and see what we've got here. Just briefly, any major takeaways? If I had to guess where the value area is, again, I didn't draw them in here because we don't really trade the Russell in that sense. We just use it as a trend / risk on, risk off indicator. This box is probably the value area. You can see all I did was look at these highs, where we spent the most time, most volume, right? So we're opening inside the value area in the Russell, which is a clear sign of divergence, a little bit of relative weakness in the Russell. So all that tells me is, hey, it's certainly not a risk-on environment out there. It's a little bit more risk-off, as a matter of fact, because of this neutral / more bearish open in our, ultimately, indicator that we call the Russell, right? So that's what I've got in the Russell. That's what I've got in the NQs and the ES. Hopefully that was useful for you. If you've enjoyed the breakdown of that so far, do me a favor and hit a thumbs up on the stream here. And with that being said, we'll jump through the S&P sectors just to get a little bit more of a fine-tuned look as to what we should be paying attention to this morning. And then hold me to it, guys. After the sectors, that's when we're going to take a look at PayPal. Okay, so after the sectors, we've got 11 to go through. We'll try to keep it quick. We'll take a peek at PayPal, okay? Cool. All right, here we go. XLF, what's going on in the financial sector? Certainly what looks like a very interesting move here pre-market. I don't know if that's just a fake print from Thinkorswim, but regardless, we're still inside the prior day's range. Strikes me as being neutral, right at the midpoint. We are above the value area, so to speak, on the XLF. So I wouldn't really be overly bearish out of the gates. And obviously, something I haven't even addressed yet. Geez, you guys gotta call me out when I do something like this. What's the title of today's stream, chat? I'll let that question simmer for just a second. What's the title of today's stream? And then we'll talk about that thing in just a moment. But XLF, right? Sideways at the 50 SMA. Oh, did I just give it away? I don't know. I don't see this as being outright bearish just yet. I think yesterday was a day to sort of look for breakdowns of this low, and the sellers, I don't want to say that they failed because, we did move a little bit lower, but they didn't really materialize in the sense of a weak close outside of the Monday range, right? So you can clearly see in this large lower wick, buyer stepped up, we're opening in the midpoint now. So again, I don't want to just blatantly say blanket statement the sellers failed here, but there really wasn't much, at least in the financial sector, there wasn't too much, clear acceptance outside the prior day's range, especially with this close back inside and now opening in the midpoint above that, again, quote unquote value area. So please don't misconstrue this as like outright bullish. This is going to the moon. This is going to, send the S&P higher, but it's at least a little bit more neutral than outright bearish. We're still definitely underneath that pivot 33.75. I would remain neutral to bearish underneath that, looking for continued breakdowns over time. Can we build out a daily bear flag, break down these lows, break down the 50 SMA, and get a rotation lower? That's probably the higher time frame outlook if you want to remain bearish here. If it's going to flip back to bullish, again, we've got to see a higher low above 33.75. Doesn't look likely, at least based on what we can currently see in the pre-market today. Energy sector, breaking down a little bit. This actually is, this actually is a good thing that this is following the market and not bucking the trend of the overall market and heading higher towards these all-time highs. So I like what I'm seeing. The fear, obviously, is that this is going to come in, find a higher low off the breakout point, and then just continue to be bullish, right? So we've got lows, higher lows, higher lows, higher lows, and then this just continues on its merry way. So that's the fear of the energy sector and what it could possibly do that would remain more of a risk-off indication, ND, for defensive, right? So watch like a hawk what type of interaction we get around that 78.50 roughly. In the pre-market, we are gapping down in energy, which again is a step in the right direction, especially as the SPY is holding sideways. To see this actually falling off a bit, it's the proper dynamic of sector rotation that you want to see. Okay, so that's what I would say about the energy sector here. This is a positive development for our S&P 500. So let's see how that continues to resolve. Again, just keep an eye on 78.41. Consumer staples falling off of a cliff inside the prior day's range, a little bit more, I would say, more in the bear category, certainly around 73.82, 73.82. So right around that 50 SMA. Yeah, you guys nailed it, obviously. The 50 SMA saving the day. We'll talk about that on the SPY in just a moment here. But overall in the XLP, this does strike me as a bit more bearish, obviously, than the financial sector and energy sector because we've got big trend continuation, resting bar, and trend with a close underneath on the prior day's session. Did the buyer step up on some of these low instances? Yes, but we still closed underneath the Monday low of day. We're flirting with that level currently as we speak. I would have more of a bearish slant inside of the XLP than the XLF. The one thing to keep in mind, though, is that this big breakout point here is likely going to start acting as support. So I don't think that it's wise to be a new money short just yet, but if we can put in some sort of consolidation that hovers just above that, that's obviously going to turn into a flush point, right? So I would just be mindful of what the setup can turn into in the XLP as opposed to just looking to short it immediately on this morning session, okay? So that's your XLP. If it is going to be bullish, again, it's got to give us a higher low above 74.50. Next up, XLY, what's going on in discretionary? Closing the gap, 50 SMA, proving to be a little bit of support into the close there. We're going to have to readjust this chart. Overall, I like the fact that this is holding up at these prior pivots in here. I like the fact that the buyers stepped up. They've got to prove themselves now, and it does look like that is happening here in the pre-market, right? So 158.50 is the current opening print. It's above the acceptance, so to speak, at the lows of day yesterday. It's above what we would have considered the value area, right? So step in the right direction. Can this just consolidate out? Maybe that's a possibility for a bear flag. I would say for a positive bullish development, we've got to get back up to 162.11 and at least retest it, because it's going to tell us if we pull back off of it that, okay, we're just producing a lower high here, or if that happens and then a higher low reattempt, that's where things get interesting back to the upside, right? So something that does this, higher low, then we'll look for the breakout. But overall, a key objective of the XLY is getting to 162.11 to sort of determine the possibility of the next move, all right? So XLY, 162 is your pivot there. XLB, materials, lightweight sector, big breakdown, sitting on support here around 76. Pre-market's just flat, bear flag acceptance here. Strikes me as being slightly more bearish. Lightweight sector, not going to make or break the day, so moving on. XLI 7%, as we infamously say, underneath this area of support. It was with the resting bar low from the Tuesday session, so bearish development here, obviously. Kind of sitting in no man's land through this structure, opening in the bear flag consolidation. Bearish, 7%, moving on. Next up, XLC. What do we got going on in the XLC? Communications continuing to fall off of a cliff here. Not a great look for the marketplace overall, but look at where we're opening. Certainly above the consolidation, above that bearish digestion. So shorts late to the party. Are they going to squeeze out on the open that's painful up here? It's possible, but remember that this is still a really ugly chart. It's been ugly for a while. It was one of the biggest laggards of this overall little market rally that we've seen the past month or so. It's been under 57 for a couple of days here, so I'm not really impressed with the XLC, even with the open above this prior congestion from yesterday's session. So still very skeptical of this chart. I would say, if anything, it's got to really get back above 55.30s into this balance area from in here before we're impressed with anything, right? And something like that. Maybe there's like an hourly inverted head and shoulders, 4-hour inverted head and shoulders, maybe, but I'm just not seeing the love yet in the XLC. So carry that forward as bearish. XLRE, real estate, lightweight sector, but nonetheless, here's your head and shoulders. Obviously, it panned out. There's the breakdown of the neckline. Boom. Moving into this area of support, lightweight sector. I wouldn't try to short it sitting on a prior breakout point. Obviously, getting a little lift in the pre-market. I would say any lower highs underneath 42.50. If you're looking for shorts, that's what you want to see. Again, lightweight sector, not going to impact the S&Ps, but if you trade REITs, if you trade anything that's real estate related, that's probably what you want to look out for on today's session. Healthcare, important one, right? At least trying to go sideways and not just blatantly blasting through that 125. We discussed the importance of 125 yesterday. Here's your monthly range. Let me just remind you of that. We haven't talked about it like this in quite some time. We were too focused on this balance area, right? But now this is right back in play. So it's got to hold at 125. If 125 breaks down, I think your S&P struggles dramatically into the next leg of whatever the market wants to do here. All right. So that's your XLV. Next up is the XLK for the tech sector. What's going on here? Again, a little bit more of an impressive move in the pre-market. We saw that in the NQ, right, with that slight divergence, right? So we're opening above the value area from the prior day session. It strikes me as an indication that there's the possibility that shorts positioned poorly late to the party will close out and we move to the prior high of day. Does it really change things in the grand sense of the daily trend being down? No, absolutely not. So remember the higher time frame analysis that we did. Here's your highs, lower highs. Very likely that any rally can still produce a lower high. So from here to here, right? Something like that. So it doesn't really change the structure. This one is certainly already through the daily 50 SMA. So that didn't really offer us too much support. I think that, again, short-term implications are that there could be a little bit of a squeeze here, but ultimately on the daily time frame, you're looking for the lower high. Any lower high that happens roughly around 142.50 or below, game on for continuation to the downside. That's your XLK. Again, just on this morning's open, if we pull back, the pullback buy, if the market's holding up, is 137. If we get into 137, looks like the market's reversing. You see a nice setup down here, 5-minute hammer, double bottom, inverted head and shoulders, whatever time frame's right for you. Remember that spiel we just had earlier today about time frames, right? Whatever is right for you. If you see the right buy reversal setup around 137, that's an area of interest, okay? So that's what we've got on upside in the XLK. Falling back into range, neutral, sideways. Wouldn't want to get chopped around in here. Scalps, absolutely fine. But overall, this directional moves, not so much. XLU utilities, what's going on the Utes? Pulling back a little bit here. Remember that this is still sitting up here at the highs. So on a relative basis, just in terms of location, this is still really bullish, which is not great. That is D for defensive. Would love to see this come in and test that like 72 handle, 50 SMA, retrace this move 100%, and then just go sideways in here. That would be a decent look in the XLU. All right. So that's utilities. We've got 9:17 on the clock. Here's the SPY really quick. And we'll quickly look at PayPal after this before the core list of companies, right? So here's the spiders, SPY, spiders, all the same thing, right? Expected move, right? We're approaching the bottom end. We're not all the way through it yet. We didn't get through it on yesterday's session, but certainly inching towards the lower edge, obviously, as opposed to the upper edge. So that's got to be more bearish than bullish. 50 SMA, we're through it. We closed underneath on yesterday's session, but with the current open slated to be around 40.31, we're right back at the 50 SMA. 50 SMA can tend to be a bigger area of support and resistance. I usually say on the smaller time frames, I'm not really watching for the 50 or for the 200 SMAs to act as a critical level, but on the daily time frame, we've got to flip the script a little bit. The reason being is that institutions, large hedge funds, pension funds, people who need to deploy capital, right? They use the 50, they use the 200. Money managers tend to favor things that are trading above a 50 SMA, and the 200 is kind of like the grandfather SMA of all moving averages. All right. So anyways, that's what I would say about the importance of those two moving averages on the daily. And again, we're just opening right on it on the daily time frame here in the SPY. So will it save the day? Remember that these things they're not so much precise. It's kind of a zone. Interesting that the 200 in the most recent interaction literally was the top tick of the move. But what I would point out is, again, look at this pullback, held the 50, right? That kind of ran there. Pullback, is this going to hold this general area and then turn into a reversal? It's possible. Let's look at some other examples of 50 interaction. So right through it there, chopped around it here before getting a firm breakdown. So tried to hold on the pullback, right? Didn't really do much though. Some instances. So if I do this, this is perhaps the greatest, one of the greatest examples of all time. This entire rally from the sickness lows of 2020 all the way on up to 2022, the high. Look at your 50 SMA, right? You tell me, right? Buy. You know, this one's certainly a little bit more volatile around that time frame, but look, buy. It basically turned into a trend line, right? And there are other examples of this in the past as well. It's not just during the sickness, right? Here we go, a little bit deeper back. There's a buy, there's a sell. I'm not saying that the 50 SMA should turn into your only strategy to interact with the marketplace. All I'm trying to illustrate is it does carry a little bit more significance than just a random time frame like the 30-minute 50 SMA with extended hours on versus extended hours off. That's all I've kind of got for you, all right? So 50 SMA on the daily, really something that I would recommend you pay attention to. And all I'm getting at is, will it save the day here? Certainly the possibility that this could be the area where we look for a reversal if the conditions are right. So if this squeeze happens and we start a leg higher, that, as we know, could suck in longs who are waiting on the sideline here who don't want to miss the move, right? So that's the SPY. That's what I've got for you in a nutshell. Some of these lower levels I did not transpose from trading view. So what I'll do is I'll just open this on another screen here. Bear with me for 1 second. So I got a little lazy, guys. I'll admit it. I got a little bit lazy. I didn't transpose my levels this weekend. You guys know I was at the mobile command station there to the Thinkorswim charts. But here we go, right? So here it is on TradingView. And this is our like mega line in the sand. We know that. That's 390.85. Does this still have the levels? Does not. Anyways, 390.85 line in the sand. To the upside, right, we've got a little bit of resistance around 402.80. And then after that, we know that 408.25 and then the bottom end there at 411.80. Okay, so those are the numbers just to keep it consistent here in the SPY. All right, that's what I've got for you. What is the value area high on the SPY? Let's take a quick peek here. Why don't we? We'll go back on over to Thinkorswim. If I could get this to cooperate. There we go. Value area high on the SPY is roughly, I would just use an eyeball, guys. 399.50. 399.50. If we're above 399.50, all good. We're above this consolidation, right? You don't always want to eyeball the value area, but when it's this clear, when this is just a drop off like a cliff, and then you get sideways, you can make a pretty decent bet that that's going to be your value area. So again, 399.50. In terms of what that looks like in the ES, remember, it's basically the same structure. So let's go back to the ES. Basically the same structure. So in the SPY, we were just referring to these highs right here. In the ES, technically it's a little bit lower. We've got 39.96 quarter. So, what that translates to in the SPY is roughly 399.60 minus a little bit because there's a premium priced into the futures contract, right? So that rough area. Hopefully that helps, all right? So here we go. I don't want to not stick to my word. We're going to do it. PYPL is first up on the chopping block for today's session. We don't need 10 years worth of data now that we've hit home that 50 SMA point. So here we go. What do we see in PayPal pre-market? Anything interesting? Yeah, there's an upgrade, right? We talked about that as a catalyst, but it's not really producing anything like big time. This is not like a gap up to these prior highs in here. We're certainly opening on a very small gap, but we're just opening at the prior high of day for all intents and purposes. What I would say about the PayPal daily time frame chart, though, is here's a range. Here's a look below and fail. We're opening above these two bar highs. Shorts, who were number one, looking for the breakdown of the range, absolutely got toasted on the Monday open where we filled the gap. Feeling a little bit better on Tuesday, yesterday's down day, and shorts late to the party here, now they're getting hammered as well. And the initial shorts from the breakdown of the two-day lows, or excuse me, the range lows from here, they're now feeling pain as well. So there's the possibility that this gap green over red does produce a little bit of a move higher to the top of the range. So I would be watching PayPal this morning. If this is, high up on your priority list of things to trade, watch out for a rotation into 96.85. 96.85 here on the daily time frame, just rotating back up to the top of this range on the look below and fail, gap green over red from a psychological perspective. That strikes me as a healthy trade to be watching for. Some setups on the open would be just a sideways that then breaks the top on a hold of the gap fill. That's bullish, right? Anything that dips a toe into the prior day's range, so just use your prior high of day as an arbiter there, that's 94.50. Anything that dips a toe inside and then rallies back out across through the opening print, across through the high of day, that's your setup to go long up to that daily target up there. So that's what I would say about our PayPal trade. And of course, it's got the catalyst of the upgrade from Bank of America. All right. So that's PayPal. We actually did it. We hit it. We didn't miss out on something we said we were going to do. That might be a first for the stream. I do see the numbers starting to taper off as we get closer to the bell. We've got about 5 minutes here. If you're on your way out, please just do me a quick favor and hit the thumbs up button before you leave. Greatly appreciate it. And I wish you a great trading day if you're heading out early. Let's get through the core list really quick. Apple, what's going on here? We've got a gap fill scenario on the daily time frame. We're not at the 50 SMA. We're well above it. We're moving higher in the pre-market. We're above that consolidation zone that we've been discussing. As long as we're above 159.50, that keeps the shorts here late to the party feeling pain, and we can squeeze up through some of this range. If there's a pullback that holds it, that's a bullish setup. Looking for the buy there if you see an intraday double bottom, hammer candle, inverted head and shoulders. If we dribble back down into this range here, I would kind of be risk off, not really looking to push it in Apple to the downside in this range. Really kind of more of a choppy situation as opposed to a trending one. So that's what we've got Apple. Netflix is up next. What's going on in Netflix? This is starting to look like really ugly, but starting to look like a head and shoulders. It's possible, right? In the pre-market, big push here outside of this consolidation range. So again, shorts are getting a little bit squeezed here. It would seem that would be what it seems here in the pre-market. So as long as we hold up in Netflix, I would say that your level is probably 222.50, 223. This general zone right here, the high of this consolidation, all set. Fine. Consolidate here, and then your break is the 2-day highs. I'm not so concerned. 228 is still a pretty critical level from here. But notice that this range is really about the 2-day highs. So I wouldn't want to really push Netflix long unless we get a breach of 229.70, 230. 2-day high break, that could send us up towards that 234. Okay, so that's probably the better long in Netflix for about a $4-ish move. Break of the 2-day highs moves us higher, right? Shorts trapped at the lows, terrible location. They fuel the rally into that, and it's just a move to the top of this daily range from right here. That's what I would say about Netflix. Next up, we've got Tesla. Big relative weakness yesterday on the breakdown of this overall range here. Close underneath, right? So big failure at this level here. Pre-market did not hold up whatsoever. We were talking about relative strength here. Filled the gap and then just, boom, plunged, right? So in the pre-market today, we're opening in the midpoint of the prior day's range. That's got to be a little bit more of a neutral implication. We're also opening right at this 280.15, which was the breakdown level from the prior low of day, roughly, right? So this right here led to that sort of afternoon sell. So a couple of things I would watch out for in Tesla. If we can't really get any love above this 280.15 and we dribble back lower, that's a sign of weakness. Looking for shorts underneath the opening print, low of day, something of that nature to just continue this move to the downside, right? We've got a resting bar, and then we've got a new expansion of range to the downside. Can we expand that further? That would be a question to ask to the downside of Tesla. If we accept above 280.15, then again, being so neutral in the midpoint of the prior day's range, I don't know that I would push it long here just yet. I might want to see some more structure develop. That way we have better risk reward. Technically, if you see an opening range and we do this, obviously your stop can go low of day underneath that 280.15. If you're targeting this, definitely makes sense. But, we've got to see it happen intraday, right? I can't tell you about that, pre-market here. So Tesla a little iffy there on longs. Next up, what do we have? Google. Just kind of ripping to the upside in the pre-market. Big move over this. Bottom end of the range, is trying to hold up here. I think shorts late to the party. Shorts shorting in the hole here. They're getting squeezed out. So that's what I would say about Google. Upside probably looking a little bit more likely. I would watch out for higher low pullbacks that stay, for the most part, above 110. Above 110, and we're good for the higher low pullback in Google. If we fall back under 110, I would just be more neutral in this overall range, not get too aggressive. All right, we've got about a minute left until the bell. Meta absolutely ripping. I saw some comments in the chat here about it ripping to the upside. very interesting. I don't know what type of news came out. We don't really have enough time to inquire there, but this is obviously a huge gap up, big positive force for the market. XLC is probably making a little bit of a comeback here. Yeah, big move, push higher there. So Meta gap rules will be in play. The first implication is not to chase this long. Please do not chase Meta long on the open. You're getting in with the worst possible trade location. We know that the range in general has relative weakness. We're gapping into 166, which should now offer some resistance, right? Please do not just chase this long on the open. You need some structure. If you're a really bold trader, if you're a really astute trader, there's possibility for a gap fill trade, a short trade to unfold there. But in general, I would probably just stay away from Meta on the open. Again, we're just too sloppy in this range. The overall context of the market is down. This going higher doesn't strike me as wise to chase on the open. I will not be doing that. You're going to do whatever you're going to do, and that is that. Nvidia, we've got about 3 seconds until the bell here. We know that the ES is still opening in range. Yes, there it is. There's the bell. So we'll give you the first 5. Patience here on the open. ES, sideways. Still above that value area high, though, so that's, excuse me, a good sign. That was our first requirement, right, for being bullish here on today's session. So step number 1, complete. Step number 2 is seeing if we can get an opening range here that sets up some sort of break over the highs for a move to the overnight high, then possibly the prior high of day, squeezing out some of these shorts late to the party. So continuing to keep this on watch. How did the internals open? Internals flat on the breath, 1-to-1 reads there. Where's our advanced decliner? It's up towards the 1,000 read. That's slightly more bullish than bearish, obviously. And ticks are opening above the 0 line, firmly above 500. Again, another slightly more bullish implication there, which is nice to see. It doesn't change the fact that the ES is currently barreling for the retest of the value area high. So again, the sort of outlook that we had was, can we put in a reversal off of this for a move higher in the ES? Watching the value area high there. Let's go over and just round out the core list of companies quickly for anyone else who's still sticking around for it. In Nvidia, this obviously no relative strength, opening inside that chop and slop from yesterday afternoon. Nothing to do there. Microsoft, a little bit better, above 263.50, stays bullish, right, on the pullback there, keeping these shorts late to the party feeling pain. So far, so good on the morning pullback. Next up, we've got Amazon, last but not least, the mini beast. This as well, holding up firmly above 128.50, strikes me as what you want to see. Overnight low, prior highs from this bear flag consolidation. As long as we're above that, these shorts late to the party are feeling pain. That is your number, 128.50 here. All right, let us drop this down to a 5-minute and see what's going on the SPY now. So opening, remember we discussed we were basically opening right on the 50 SMA. We're technically underneath it here. Value area high that we were talking about was 399.50 for, rough purposes. Current look is that the candle is pushing underneath that, obviously. Not a great indication yet for any type of long. Something that would be interesting, we've got about 3 minutes until this first 5-minute bar closes, right? Is let's say that this closes a 5-minute hammer. The body ends up being something like this. This is all just one big lower wick. And let's even conjecture that the candle closes green, a little expansion to the upside. Breach of that candle high gets interesting for follow through to the upside. That's if that happens in the first place, and that would be the sort of trade holding value area high right here. This push lower, again, not that convincing for something like that to unfold. We still have some time left on this candle, about 2 minutes left on this 5-minute bar. Let's go back on over to our internals. These are slightly degrading. You can see that just flipped red on the NYSE. It's back and forth, kind of at parity. So those reads are not really that impressive in terms of telling us anything major about the market. The ADs are trending lower towards the 0 line as opposed to just going sideways, which is, it's not the end of the world, but it's certainly not a bullish implication. The the ticks rather, coming into the 0 line, which again, neutral. It's not really bullish or bearish at 0. I would say, if anything, coming in from a higher read here and not holding is a slightly more bearish look, but again, still more neutral as opposed to, okay, short this thing to 0. So knowing what's going on in the internals here, knowing that things are kind of in balance and nothing crazy is going on currently, I think patience is still the play. And this is kind of what we were advocating for on the stream, right? So let's end that official poll over on the YouTube chat. Looks like 42% came in bullish, 33% neutral, and 17% bearish. 6% having no idea on today's session. So that was cool. Thanks if you participated in that. We've got a minute to go in this first 5-minute close. Back on over to the 5-minute chart on the SPY. Again, it doesn't look likely. A lot can happen in a minute, but it doesn't look likely, at least as of now, that this is going to close as any type of hammer with a nice long lower wick, rejecting this value area high and pushing us back higher. Does not seem likely based on what's unfolding here. So that means patience. Remember, as we get into this value area, that's where the two-sided back and forth trade can take place. We just confirmed that the market's not really feeling a big trend yet based on these numbers here. Parity, parity, under the value area high, right? So patience, patience, patience. Nothing is happening yet here early on in the day. You never have to be, scrambling to click the buttons. 9:31 comes around, you got to be in a trade. It's not the case. A little bit of patience will serve you well. So let's quickly flip through the companies here. Apple, nothing to do. Big red bar back into the value area, back into the chop and the slop. There's no setup here. Netflix, interesting. Green bar, relative strength. It's the only green name on the list. It doesn't have that negative sign in front. So we'll see what happens on Netflix. Can it give us a bull flag here? So we've got a big trend bar to the upside. A little bit of an upper wick. Let's see if we can put in a resting doji or some sort of bull flag here now on the 5. That would be impressive for upside. There's the 2-day high breakout that we were just discussing in the stream, right? We breach these. Boom. That's a trade. Tesla, anything interesting here? Nope. Red off of that 280.15 that we just discussed. So that's slightly more bearish than bullish. On the daily time frame, we're below the balance area and rejecting that area. So probably start scouting short trades in Tesla. Google is next. Google falling back into the prior day's range. Remember that that's also a patience indication. I would say in Google, if we can support off of this 109.15 area, maybe there's something to do here. This, let's see what type of bar prints. It is kind of quote unquote trying to catch the falling knife because we see this big move to the downside. But if we put in a reasonable pattern with decent risk reward around that area, maybe there's something in Google. Meta, this is why I said please do not chase this long on the open. Nvidia, we said that was sloppy and choppy in the prior lows. Microsoft, trying to hold up above the value area, right? Trying. Nothing, no setup quite yet. If we get back-to-back hammers, there might be something to do. So that's interesting. Let's see how that wants to pan out. Microsoft, maybe. And then Amazon, nothing to do here. Actually, what was that number we just said? 128.50? 128.50, right? Pre-market low, prior area right here. Interesting. If this turns into a hammer, there might be some sort of reversal back to VWAP. That's if you're, aggressive. Anyways, what's going on in the ES? Breath's continuing to get divergent. This was like a 1-to-1 read. Now it's 1.3-to-1. So a little bit more bearish on the NYSE than the NASDAQ. The divergence, though, is really what we're looking at, saying, hey, there's not big confidence or confluence in the market going one way versus another. Advanced decline line at 0, ticks at 0, and the ES just kind of chopping inside the value area now. So that's the first 5 minutes. Thanks for joining me. If you appreciate the stream, again, do me a favor and hit the thumbs up button on the way out. If you're not in the Discord, get in the Discord. It's completely free to join. Linked right down below right here. Hope to see you in there, and I wish you all a green trading day.